when it's not controversial and it's easy, right? Everybody will want it, right? No, nobody will make fun of you for buying it, but you won't be able to afford it. Like you'll be able to buy 1% of what you could buy.
Earlier this year, while speaking at the Bitcoin Atlantis conference in Madeira, and then at Bitcoin Prague in June, MicroStrategy founder and executive chairman Michael Saylor proudly declared that Bitcoin had entered a decade-long gold rush era, which he claims will be marked by multi-trillion-dollar firms such as Microsoft and Apple investing in the leading digital asset to avoid fiat debasement. Saylor believes the Bitcoin gold rush began in January, when the U.S. Securities and Exchange Commission, SEC, approved 3 spot Bitcoin ETFs, allowing thousands of institutional investors to buy in the largest cryptocurrency by market capitalization. Saylor predicts that the age will last until 2034, with thousands of hedge funds, pension funds, sovereign wealth funds, country states, and even corporations like MicroStrategy directly purchasing Bitcoin or investing in it through spot Bitcoin ETFs. Saylor describes the licensing of spot Bitcoin ETFs as a game changer, representing a substantial shift in the cryptocurrency's regulatory structure. The SEC's approval was a critical step towards dispelling myths about Bitcoin, such as it being a magical internet currency or a money laundering plan. The attention of large Wall Street firms such as Fidelity and BlackRock strengthens Bitcoin's position, signaling that it is not a transitory fad, but a long-term investment potential. In this gold rush age, the MicroStrategy executive chairman believes that the last piece will fall into place, allowing all types of investors to readily participate in Bitcoin. The final step is regulators' clearance for banks to custody Bitcoin. Saylor believes that when this occurs, Bitcoin will rapidly begin to realize its actual value, eventually reaching hundreds of trillions of dollars. In a recent interview with Bitcoin News, the renowned billionaire business entrepreneur discussed some extremely positive Bitcoin forecasts. During the conversation, Saylor makes an extremely bullish $100 trillion estimate for the main cryptocurrency.
Are you surprised that it's taken public companies so long to begin to adopt this Bitcoin treasury strategy?
I guess I'm a little bit surprised, but yeah, because once you get Bitcoin and it clicks in your mind, your immediate reaction is, oh, I got to hurry and buy as much as I can because someone else is going to go take all my Bitcoin away from me. So like in 2020, when I started buying Bitcoin, I was thinking, oh no, I got to do this in a hurry because someone's going to figure it out and the price is going to 10x. And I better get it before it 10x's. So, I mean, that's a natural reaction when it finally clicks in your head. Because you're thinking, why wouldn't every billionaire in the world go and buy $1 billion of Bitcoin, smash buy it overnight, and just to make $1 billion? Because why wouldn't they just want to make the $1 billion? Or 5 billion or 10 billion or any amount of money. I mean, Bitcoin, it feels like in the early days, the infinite money glitch, right? But the practical case is the world falls into conventional patterns and conventional behaviors and ceremony and ritual. And there are a lot of forces of conservatism that cause institutions and companies to move slower. So for example, in the last 4 years, one question is, will Bitcoin be embraced by the regulators? And that wasn't really clearly answered until January of 2024. So when the United States SEC approved the Bitcoin spot ETFs, that was a major endorsement that this is not tulip bulbs, this is not a scam, this is a legitimate institutional digital asset and digital commodity. So that was a very important point. Another thing that had to happen for corporate adoption is fair value accounting. If you bought $1 million of Apple stock and it doubled, you would have $1 million investment gain. But if you bought $1 million of Bitcoin under the previous indefinite intangible accounting and it doubled, you would probably be showing a loss. So a CFO that's indifferent, if they said, well, wait, I can buy this, and if it doubles, I'll make money. And if I buy that and it doubles, it'll look like I lost money. That was, I would say, prejudicial, hostile accounting. And that only just changed this year. And then the third thing that is required for institutional adoption in a big way is for the banking system of the world to start custodying Bitcoin. right? If I'm Google and I generate $1 billion a month, or maybe $1 billion a week some weeks, I have no problem wiring that money to JP Morgan or Citigroup and saying buy government T-bills. And a junior employee at Google does that wire transfer, and it's routine like this. But if I wanted to buy $1 billion of Bitcoin, I can't wire the money to JP Morgan or Goldman Sachs or Bank of America or Wells Fargo. I have to go find a new relationship. I have to set up a new vendor. A lot of times these companies had the same bank for 20 years, 30 years. You know, now, Citibank used to be National City Bank. National City Bank was the Rockefeller Bank. It was John D. Rockefeller's bank. Right? It's not unlikely that the oil companies have been doing business with the same bank for 100 years, right? So when we did it before those things. Right now, what we've seen is the ETFs have been an important green check in this process. The accounting changes have been a second green check.
The Financial Accounting Standards Board, FASB regulation change is a long-awaited success for Bitcoin and the whole cryptocurrency and digital asset ecosystem. The board's regulation change allows corporations that own Bitcoin and other cryptocurrencies on their balance sheets to report their crypto assets using fair value accounting rules. Prior to the regulation change, the board defined Bitcoin as an indeterminate, intangible asset and considered it as a dangerous, exotic asset that firms should avoid purchasing. According to the MicroStrategy inventor and former CEO, this is precisely why many chief financial officers struggled to commit enough resources to the main crypto asset, despite its numerous advantages. Fortunately, the rule change allows firms to report gains and losses on their cryptocurrency holdings as gains and losses from investments, rather than operating losses and gains. Company executives can now invest freely in Bitcoin, knowing that the rule change will keep volatility out of their core business. This is why Saylor is confident that many more firms and institutional investors will take advantage of the next 10 years to buy Bitcoin before its price skyrockets.
I think at the point that you see the mega banks in the United States start to custody Bitcoin, the third leg of the stool will be put in place. And at that point, the treasurer of Microsoft could wake up in the morning and say, I think we should buy some Bitcoin. The CFO would say, okay, well, I guess the accounting looks fine. The lawyers, the general counsel would say, oh, well, the SEC's endorsed this, and there's 34 companies that have 34 ETFs with $70 billion of Bitcoin, so I guess it's a legitimate asset. And then the treasurer could say, okay, to the person at Citibank or JP Morgan, buy us $1 billion, put down the phone. And it's just very stress-free, you see. And right now, we're not quite there. And that's the negative. It'll probably be another year or 2 years before we work through the banking issue. It's clear that it's going to happen, but it'll take a bit of time. And meanwhile, the opportunity is for these companies you named to get a leg up. And if you're the first mover, it's just like someone that bought Bitcoin in 2013 had to do a lot of work, or 2017. So you have to do more work, but you get paid. And what I used to say to people is, look, when it's not controversial and it's easy, right, everybody will want it, right? Nobody will make fun of you for buying it, but you won't be able to afford it. Like you'll be able to buy 1% of what you could buy now. So when it gets easy, you'll have to pay up for the convenience of it, or you can work a bit harder right now, and the marketplace will give you a discount. The years from 2024 to 2034 for digital money are the real high growth disruptive years, and the year from 2024 to 2034 for digital intelligence, probably the same thing, right? This is the decade of digital capital, and I use the word capital because money, sometimes people think, well, is that the currency Or is it the medium exchange or the store of value? I would say the real disruptive change right now is Bitcoin will emerge as the store of value, digital capital, and what's that worth? Hundreds of trillions of dollars is what it's worth. It's worth a lot, and that's a very hard driving trend. You realize now institutions, corporations are moving in size that is an order of magnitude and 2 orders of magnitude greater than was going on before. That's going to continue aggressively for the next decade. And that is the Bitcoin gold rush. I mean, the reason that's the gold rush is because by 2035, 99% of the Bitcoin will have been mined. So right now is the time when you've got natural sellers. You've got 450 Bitcoin available a day to buy from someone that might want to sell it to you. Right? And when that supply gets cut off, the only way you're going to get Bitcoin is to take the price up and get it from an unwilling seller by bribing them with a high price increase. So this is the gold rush for Bitcoin because you've got the institutional endorsement, you've got the regulatory endorsement, you've got the banks clamoring to get in. Some are already getting in. The news this week was the largest bank in Brazil. In fact, the largest bank in South America is Bank Itaú, has announced that their customers can buy, sell, and custody Bitcoin with the bank. Imagine if JP Morgan said, hey, all of our customers can buy, sell, and custody Bitcoin with our bank. Well, that's what happened in Brazil.
In other news, the U.S. Securities and Exchange Commission authorized 9 spot Ethereum ETF applications on Monday, marking another significant milestone for the cryptocurrency industry as it expands into the mainstream banking business. Coinbase celebrated the achievement with a tweet that read, "For investors, spot ETH ETFs provide access to a differentiated crypto asset with unique return characteristics. The Ethereum ecosystem is robust, with over 15 million monthly active addresses, and it is rapidly increasing, with smart contract deployments expected to increase by 300% by 2023. On the same day, U.S. spot Bitcoin ETFs garnered $533.57 million, the most single-day gain in 49 days, according to KindLast.com. Inflows to BlackRock's IBIT totaled $526.7 million, followed by Fidelity's IBIT at $23.72 million and Invesco Galaxy's BTCO at $13.65 million. BlackRock now owns roughly 334,943.27 Bitcoin, valued at $22.3 billion, while Fidelity's FBTC owns approximately 180,689.31, worth $12 billion at current pricing. Prices for Ethereum and Bitcoin are projected to rise further this week as more institutional investors join the bandwagon.